All right, I'm pressing live. There's two people waiting so far. So, all right. What is going on, Future Focus family? My name is George, and I make videos to help you make money investing. And today I am joined by Steven. Steven, I know we just did this, but please go ahead, reintroduce yourself.
Hey, how's it going, guys? My name's Steven. So pretty much, I say I'm fairly new to investing, probably just a year from now. So what I have is I have some stocks and dividends for my portfolio and high growth stocks. Besides that, I also have a cryptocurrency. I mainly do cryptocurrency mining. I have a $6,000 investment, which in time has paid off. When Ethereum was at $4,000, I was making about $1,600 a month. Once it dipped down to where it's about $2,200, $2,300, I'm making about $900 a month in cryptocurrency mining.
Nice, man. So all the profits that you're making there, how do you receive that? Do you receive it? Do they pay you in Ethereum?
Yes, I do receive an Ethereum. So my mining pool pays out in 0.1 Ethereum, so a tenth of the Ethereum every time. So if my mining rate with the hash rate it has, I get paid around every 5 days, 5 to 6 days. On longer days when there's less transactions, because that's what the mining is for, verifying transactions, sometimes I get paid every 7 days.
Okay. So is it more beneficial for you if the price of Ethereum goes to 25,000, or would you benefit more if the price of Ethereum as a miner went to like $500? Like, where do you benefit more from, or do you benefit from both?
So we would benefit, of course, with the high price because we're mining with the transactions. It's always transactions going holding up the price of Ethereum to go higher to $2,500, $3,000. But let's say it does dip down, does that massive dip like in 2017 for Bitcoin, it'll go down. But with the transactions going down, we'll get bonuses for each transaction happening. So we'll get slightly a little more money, but not as much. So let's say Ethereum goes out to $1,000 from 2,200. So we get paid out when it's $1,000. So we get that 0.1 is $100. But with the bonuses all transactions, we probably get about $200, just like twice as much as what we get, just thanks to transactions.
Okay. And as a miner, is it when Ethereum 2.0 transitions to proof of stake from proof of work, is that going to hurt your bottom line, or how is that going to work for you?
Yes, it would hurt what we would be mining, which is pretty much we're all mining Ethereum. But a lot of us have talked in my community, and we're thinking of switching to Ravencoin or Ergo, just because it's more profitable and they're still using proof of work. At the time when proof of stake happens, I plan myself to move Ethereum and just put it as a stake, because the APY on the stake for Ethereum is well worth it. And why not let it work for you if you're not going to use that money? And I'll move my graphic card miners to something more profitable and see what they have. Proof of work, we believe, is going to be here for just probably a few more years. And if anything, just like as proof of work changes, our miners will change. We'll eventually reinvest and sell our miners and get something else, which is CPU miners, hard drive miners, or whichever that the blockchain and cryptocurrency world goes to.
Cool, man. So for those watching, when you hear that noise every time he comes on, that's him making money while we're here talking. So if that sound bothers you, don't let it bother you, because the man is over there making money with it. So we'll tolerate the fan spinning in the background. So let's get away from the mining. Let's go straight to Ethereum. So I'm in the camp where I feel that Ethereum is going to eventually surpass Bitcoin as the number one cryptocurrency. Like, where do you stand with that? Do you agree? Do you disagree? What do you think?
I do see Ethereum as moving up, just because they have the plan for the 2.0 and merging is it makes sense and it seems highly valid. And there's a lot of projects under Ethereum as well. Um, Besides that, there's always competing ones. There's some of them that where like I know which you like is there's Ada Cardano, and then there's other ones that they talked about was XRP. There's smaller ones that support it, which is West, which I don't have much information, but I do know West is coming up. And also besides that is a GRT, which is my favorite graph, which is pretty much like a information system for cryptocurrency.
That's what's up. So I haven't heard of GRT, but I'll definitely be looking into that one. That's interesting right there. Yeah, man. Just like you said, I think that it's very bullish to know that 2.0 is coming, and the protocol that's going to come out that's going to make Ethereum deflationary. Have you heard about that one? Where they're going to start burning some of the Ethereum after every transaction. I'm not sure if you've heard of that.
I haven't read into that, but I did look into a few of the altcoins that do burning and deflationary. I see like what the pull is for that because eventually, the longer you hold, the more it's gonna be worth something. But I don't know how that future is gonna play out for Ethereum itself.
Yeah, well, I mean, the big bullish thing for Bitcoin that it has above a lot of them is that it's set a very low threshold. It only has 18 million Bitcoin that will ever exist, and Ethereum has like a billion. So there's a big disconnect there. But if the deflationary thing does come into fruition, um, you could potentially get to a point, 20 years, 10 years down the road, where Ethereum, or even less, because there's going to be transactions from NFTs, from DeFi. There's going to be a lot of things going on, smart contracts. All those transactions that involve Ethereum are going to have a deflationary aspect to it and are going to reduce the amount of total that are in circulation. In the stock market, whenever a company uh, puts more stocks in, they in turn end up devaluing the stock. And it's the same thing in cryptocurrency. The more, like Dogecoin, there's more being made every single day without a deflationary aspect. So the value of Dogecoin literally goes down every single day. And it's only worth right now because a lot of people are still holding on, hoping that it'll go back to $1. But yeah, there's a lot of deflationary things out there. And I think with the way inflation is going, I'm not sure if you saw, but it's averaging the last 2 years 2.5% per year, as of the latest data that came out last week, and that's a lot hotter than we expect. So that's one thing to keep in mind as we talk about that. There's some things to keep in mind with the inflation aspect as well. So uh, what kind of stocks should we be investing in as we move forward into inflationary time frame? This is where you want to move. It really depends on the 10-year yield. So if the 10-year yield is moving up, then growth becomes less valuable and dividend paying stocks and value stocks become more valuable. So you could see stocks like McDonald's and Coca-Cola, those could outperform the S&P 500, whereas FANG, Facebook, Amazon, Apple, Netflix, and Google will underperform the S&P 500. But if the 10-year yield continues to fall, and I see it going later on this year to 1.25, then you want to be in those big tech stocks, those big growth stocks, because that's where a lot of the money is going to go to. And for a lot of people who don't think inflation is here, just imagine if cryptocurrency didn't exist and we went through the same exact pandemic. Right now, a lot of money that's in the system went and got split up between cryptocurrency and the stock market. So imagine if there was no cryptocurrency ever made. Imagine how much do you think Apple would be sitting at right now? How much do you think, like, a lot of these stocks? Imagine AMC and how much do you think these stocks would be sitting at? So that's one thing you want to keep in mind. One thing I wanted to do is we're gonna share my screen real quick. Let me see. Hold on. All right. I'm gonna share here. And let's look at the most active stocks in the market this week. So this week, the most active stocks were AMC, sitting at increase of 15.39%, and with a volume of 217 million shares, which is way above the average volume trading. One to look at is this one right here. I own it. I own it under $2. The name of the company is called Sensonics. This can potentially be one of the next meme ones that may be occurring. So look out for a big one from this one. It's called Sensonics. I don't know if you've ever heard of it before, Stephen, but this is a potential big one for the community over there. It has a lot of the things that the meme stock investors look for. They look for stocks that are worth under $10 a share, $20 a share, and that are heavily shorted. And this one was very heavily shorted. So one thing you want to look at is this one right here. I'm not saying buy it, do your due diligence, of course, but this is one I see having a lot of potential. Let's see. We open it up, look at the chart. So this is a medical company. This is but we can look at the chart here. Let's look at the 5-year for it. So as you can see in the 5-year, it's still down from the all-time high of here, $4 and what is it? 89 cents, let's call it. It's still down from there, but this is a stock that can potentially move up. More recently, if we look at year to date, more recently, it was here actually at $5.29. So if you buy it, you're still going to buy it down from the high. And when it went up here, it was because of some bullish news that it got. And when it dropped, it wasn't because of any bad news. It dropped just basically due to people rotating from growth stocks to value stocks. So this is a one to keep on your radar. It's a penny stock. A lot of retail investors love penny stocks. They're cheap. They put, $400 in this one and they got 100 shares of it and they feel, accomplished. So this is a interesting one to look at here. What else? We got Clover Health, which I doubled my investment in this one. I invested at $6 and it's back at 15. So this was a good one. I really am bullish on anything that Mr. Palahapatia invests in. I don't know if you know Chamath, but they consider him the next Warren Buffett. So anything he invests in, I'm all aboard on it. And so far it's paid off. I made money on this one. I made money on Open Door. I made some money on Virgin Galactic way back the first time it went to 16. Luckily, I sold it around 32. I didn't buy back in when it went to 16 again. So I missed the second doubling because it's back up to like $35 per share. This is another interesting one here, even though you see the volume is down. Wish jumped up. This was another one of the Reddit stocks here. Cleveland Cliffs was another one, and this one right here is a steel play. So this could be a play for you in two different dynamics. As we move into an inflationary period, this one right here is an interesting play. Then you have obviously BlackBerry, which was another one. IVR is a dividend play, is a real estate investment trust. That'd be another one to add to your portfolio if you're into dividends. I owned this one previously, but I sold out of it. But I still think it's a good play if you just want that dividend paying strategy. This one moves up and down in a small range, so it doesn't really have a lot of volatility. So just another thing to pay attention to. As we move away from the most actives, we could look at the top gainers. The top gainer this week was Novon. It had a 62.39 and it's still rated as a strong buy. So something to look at there. This was not one of the meme stocks. So the fact that it went up 62% should indicate something. Let's look at the biggest losers. You have Orphazyme right here. And this I've never heard of it before, but I can tell you it's definitely a pharmaceutical company. And this is what happens to pharmaceutical companies. When you invest in them, you have to be, it's usually because they're about to get something approved from the FDA. And a lot of people start putting money in it because once they do get FDA approval on something, the stock usually goes up 200%, 300% whenever a pharmaceutical company. And this has been true since like the 70s, 60s. Anytime a pharmaceutical company is like in phase 2 or phase 3 of a potential move uh, or approval for one of their patents or one of their vaccines or pills, the stocks usually grow up. Have you ever watched The Wolf of Wall Street, Stephen?
Yeah, I have. I mean, it could be typical for a lot of investors, but yeah, it's one of my favorites.
Yeah, so the Wolf of Wall Street is a good indication of it. Even in that movie, you could see them talking about these pharmaceutical companies, and it's something that's really active out there. So, what up, New York investor? What's going on? Welcome.
Good evening. Good evening. Or should I say, rise and shine over there in Japan, right?
Yeah, we're live from Japan over here. It's 10:39 a.m. in the morning over here. So we could transition over here. Those are the top stock losers. So as when you're buying or selling and you're trying to figure out if you should buy or you should sell a stock, one thing to look at here is where it sits at in the overbought or oversold. If it's either or, you want to buy things when they're oversold, because that means that whatever, like there's a lot of selling pressure on the stock and it may not be warranted. So some of those stocks that were the most oversold stocks this week were Apto Biosciences, again, another biopharmaceutical company. You have ATHM, Black Diamond, Caterpillar here. And as the yield, like we talked about, if the 10-year yield continues to come down, this is one that will get hurt. So if you're investing in this one, just know that. If you're investing in Caterpillar, although they have a good dividend, it could potentially drop a lot. Let's look at the chart. Let's take a look at the chart for Caterpillar. Let this load. So as we look at the stock, let's look at the let's go. It's loading. So as you can see, look at this chart. This is a beautiful chart. It's nice and it doesn't have a lot of big peaks or valleys. It's been a lot of steady growth. And then you see this big drop here, which as you could look back, the only closest drop it had was back here, back in October. And this is when the 10-year yield dropped to like 1.25 initially. This was just a drop from 165 to 1.65 to 1.45 on the 10-year yield. And you could see how much of a big dip it had. So just imagine if it drops to 1.25. If you're owning Caterpillar, the very next drop you could see it coming to would be around the $199 range. They do pay a dividend, but just be warned that this is one of those stocks in the industrial space that it will get hit if that 10-year yield continues to drop. Adobe was another one that was oversold, and this is one I'm long-term bullish on. I don't own it, but I think it's a good one to get invested in. Let's see. As I go through here, if any of these are the ones that you guys are invested in, just let me know. We could take a look at it. JP Morgan, it's another one that was overbought, oversold. I still think this one has a lot to go. A lot of the banking stocks can still move up this summer. There's going to be some news from the Federal Reserve, the chairman, Jerome Powell. He's going to come out later this summer and brief us on how the banks did on their stress tests throughout the year. They've been getting tested all year on different scenarios to see how they would react to stress. And this could be like a recession or the stock market crashing or real estate crashing, just like it did in 2008. So they're being tested on these fake scenarios to see how they would manage it. And we're going to get those results back. if those results come back positive, the banks are going to go back to being able to do share buybacks. They're going to be able to increase their dividends. A lot of that's been on hold during the past year, but once that news comes out and Jerome Powell says, hey, the banks performed exceptionally, we're allowing them to do this or do that, just know that is going to be a bullish catalyst for the banking sector to move up. My big winners in that sector would be Morgan Stanley and Goldman Sachs. And it's because of the industries that those are in and how much they have. They're both they've been able to benefit from so many different aspects, and they have they're positioning themselves to be successful going forward. So be on the lookout. Those are some stocks I would look at: Goldman Sachs and Morgan Stanley. On a pullback, I think those would be strong buys. But let's go back here. More overbought. Let's see, anything else? APXT. This is another one. It's still labeled a strong buy, but it was up 3%. Yeah, so just some things to look at there. Jonathan, you got any questions, man? What's going on?
I mean, I'm just trying to see where you left off.
Yeah, man. So we started this with Steven. He was talking about his mining rig setup. He's the one I talked to you about when I told you, he had a rig and he's making money off of the mining.
Oh, yeah,
I know you had some questions about that, man. So if you have some questions for that, go ahead. Like, you could talk to him, you could ask him.
Basically, so basically you started with one machine, right?
Yeah, so I started with one machine, but realistically, one machine isn't going to get you paid out fast because each pool that you join pays you out in 0.05 or 0.1 Ethereum. But if you have one graphics card, that could take you like a week, 2 weeks, or a month to get just one payout. That's why I kind of started building up to a decent amount, which I think I'm good at. It's tempting to buy more cards, but I think I'm good where I'm at.
And you plan on having a whole place of that full of machines, or like, what's your goal?
So I have one. It's right next to me, so it's a bit cluttered. I need to work the table management, but let me try to. So I have right here. So I got some cards here, some right here. There's a 3 card right there, my 3080s, and I got the smaller ones down here. So this is a total of about 10 cards.
And that's what you mentioned last time, that you make like 200 from this one, 300 from that one, and you make like around 800 to 1,000, 500.
So yeah, total is about averaging with the low Ethereum price. I make around like 900 to 1,000 a month. When it was up there like at 4,000, I was making about 1,500, 1,600 a month or more.
That's great, bro. I'm happy for you, and I'm glad that you're passing the information. So I'm definitely gonna.
Yeah, I mean, we're all here for trying to make money. So yeah, and I mean, as cryptocurrency grows, you'll need more transactions. You'll need more miners to
definitely
get to that area.
Does it interfere with your electric bill a lot?
So yeah, electric bill. I'd say electricity is paid for, but if I did pay for it off base, if I pay for it like at somewhere like in California where it's 18 cents per kilowatt, I think I lose about $200 in my profit. So I still make $700 to $800 a month. I think that's still profitable and still worth it. But that's where Ethereum's at right now. If it goes down below that, like, you can lose some profit. Eventually, if you hold the Ethereum, you never know how high it's going to go. You don't know where it's going to be. Some people estimate Ethereum at the end of this year could be at maybe at stable $5,000. There's a lot of bullish people. Some people say maybe this is stabilize at 3 or just stay at 2,500 around that for the whole year.
Yeah.
Hold on, Mackenzie just called me. Go ahead, keep asking him questions, Jonathan.
Yeah, I'm listening to him while he's preaching.
What about you, Jonathan? You investing in anything?
As of right now, I'm good right now. I'm just learning from you guys. I'm listening to what you're doing.
Yeah, that's all good. But if there's anybody out there that's interested, or if they're interested, I'd say if you just want a passively mine, just get a decent graphics card on your computer and just turn it on whenever you're not using it, and then turn it off for the miners. There's a lot of different types of mining. I use Hive OS. Some people use NiceHash because it's really easy and really simple interface. But they pay in Bitcoin. But if you're not into investing mining and trying to get the payouts on time, then you can just use one card and just let the money stack up over time, and in return you'll have some money. There's somebody I know that they use NiceHash for about 4 years and they got half a Bitcoin so far. So yeah, 4 years. So he has half a Bitcoin mined so far, and he's passive on that. Half Bitcoin now is about 15 grand or more. When it hit 60 grand, he had 30 grand. So I'm sure he's letting it stack. But it all depends on how you want to do the mining.
Hey, so for somebody who's going to get into it, let's say the NY investor here decided he wanted to get in on it. When you get your payout and it comes to you in Ethereum, would you recommend keeping it in Ethereum, or would you tell him to move that more to USDT or USDC, which are, for those who don't know, those are stable coins. Those are coins that are tied to the US dollar, so they don't really fluctuate up and down high percentages. They usually stay right around $1. So it's like a safer play in the cryptocurrency market. So what do you recommend, Stephen? Would you recommend that he stayed in a stable coin, or how would you navigate that?
So there's many ways. The way I did it at the start was I immediately got my payouts for a decent time when Ethereum peaked at a decent high, cashed it out and paid it off because I wanted to make my return on investment first. And then once it finally when I paid everything off, I have it sitting in Ethereum, but I take about 25% and I put it into other altcoins that I have, which is like GRT, some with ADA. Right now, because it's low, then I'm just keeping Ethereum right now. But when it was higher, I was moving it back and forth. So I would at least keep a decent amount of Ethereum just to let it see and let it kind of sit and get the API. Because eventually, when Ethereum moves to proof of stake, you're going to want to move it and stake it, just so you just have APY just sitting there and making money without doing no work at all.
Yeah, man, those are all great points. There's, again, for those who are interested in the mining, there's a lot you can do with it. You could pull that money out as well, turn it into cash. And if you want to keep growing your mining capacity, you can do that. Like, he said he's not really planning on doing that right now, but that's another option you have if you do want to get into mining. However, you need to know that with the chip shortage that's going on around the world, we got to look at things in a macroeconomic lens as well. So with the chip shortage going on around the world, these chips that are necessary components for mining rigs are very overvalued right now. So it might take you longer to get a return on your investment. One thing that can happen to you, and you need to be potentially, you have to know the negative catalyst for what you're doing. So potential negative catalyst that you can experience as well is, what's up? Welcome, Matt. Another negative catalyst that you can experience as well is the fact that this is what can happen to you. You can overpay for something, a rig, all the components of the rig, which are all, I'm sure Stephen could attest to it. He's mentioned many times that it's even hard to find a lot of these components. So you can go ahead and, overpay on the front end. Then you go and invest in something like Ethereum. Then you may end up overpaying or like getting underpaid on the back end. So that's just something you need to be cautious of. Um, but we're going to move the conversation away from cryptocurrency. The next topic I wanted to get into was China. I wanted to get into talking about the potential catalyst for China. Is it investable? Is it not investable? Matt, you just got here. I wanted to hear your thoughts on China. What do you think?
Pardon me, I had to get into New York City mode real quick. All right. China. What do you want to know specifically? What are you trying to target specifically?
Well, I want to know people who are looking to invest outside of the US. You know, maybe they don't want to be 100% US weighted, and they're looking for opportunities to invest in emerging economies or developed economies, and they're looking for where to put their money. You know, they might want to put 5% in Brazil and 5% in Europe, the European banks. What about China? With the political stress that we have with them, do you think that China is a good investment now or not?
Wow. So there's a couple plays that you can consider. I'm gonna brush over it really quickly. So one of the historically challenging things about investing in Chinese companies is that their books that I'm not trying to disparage anybody or anything, but they're known to cook their books, right? So a lot of entities that try to invest in their private equity, they have to bring their own set of accountants because a lot of Chinese companies are known to specifically cook their books. So that's just something to remember about the culture. I'm not sure if they've taken strides to change that. A good example of that is they came out with their own version of Starbucks. I can't remember the company, but that company was found to have cooked their books.
Yeah, that was Luck and Coffee, man.
Right,
Luck and Coffee,
right.
Luck and Coffee, and that stock dropped from $52 to like $2 in the span of a few months, and it was because they lied on their books. As a result of that, one of the things the Trump administration did was they kicked off, I believe it was 150 Chinese companies off of the exchange. Because of that, because they made new rules where Chinese companies now have to adhere to the way we present our books in the United States. So that was something I felt was very bullish for our market going forward and our stock market relationship with them, because if we don't do that, we're not protecting American investors. But we also can't kick them off 100%, because then we're hurting American investors, because a lot of them are going to just IPO in Hong Kong, and that's going to keep us from being able to invest on their side. Something that happened just this month was that BlackRock became the first American company to ever launch a mutual fund in China. Not sure if you guys heard about that, but BlackRock just became the first company to do that. And BlackRock is a huge company, so it's not a small task, but that's what one thing I'm talking about. A reason I bring this up, because there's a company that's coming out, and I don't know if you guys know the history of it, but there's a company called Didi. Have you guys heard of Didi?
Is that the Japanese taxi app, taxi company, or whichever?
Yeah, brother. So Didi is it's hard to call it the Uber of China, because Uber was actually in China. And this company was so big and so massive and so popular that Uber literally had to like say, you know what, we're going to stop doing business here. And they took a 10% stake in Didi just so they still get some Chinese money. But they eventually just got phased out of China completely, and Didi just grew and grew and grew exponentially. And that company is about to come to market. Now, Didi is not just like Uber. Didi is in like so many different other sectors, and they do so much. So they're also doing what Uber does, like the Uber Eats thing. They're doing things where they deliver things like groceries. Like they're also doing this thing where they're turning their app into a financial app as well. So they're gonna have like their own type of little coin. It's not cryptocurrency, but their own type of coin where you have to invest yuan into that. And then you could use, it'll be cheaper for you if you put yuan into their currency and use things on their app. They're going to be like a financial institution. Now, this is going to be probably one of the biggest IPOs of this year, but a lot of Americans don't know about the company. So I would suggest you do your due diligence. I might be an investor, maybe not on IPO day, but China has so many people there that is foolish to think that investing in a Chinese company would not be beneficial to you in some way or fashion. But I know you have a different way of looking at things than I do, Matt. So I just wanted to see what your take was on it.
I don't disagree in investing in Chinese companies. I just like with all things, proceed with caution. So you have the false reporting with certain companies at times. I know another big thing right now that's hot right now is their bond market. A lot of their companies are defaulting on loans. So investors are standing by to see how they're going to cover these loans. But overall, I do believe China is where it's at. But I think a safer play is commodities. And the reason being is that the world is realizing the world is realizing that they have to go green, and in order to go green they need certain key commodities, right? So whether it's the material to make batteries, copper, all those things, all the green metals, they call them green metals, and they call them green for a reason, because you need them in order to turn the society green. um, so I think that's a great arbitrage as far as playing the Chinese market. So specifically copper, right? Specifically lithium, pardon me, and other metals within that realm. But yes, copper. I'm sorry, China ultimately is where you want to put your money, or begin to diversify.
What's up, Burke? Welcome to the chat, brother.
What's going on? What's going on?
What's up, brother?
That's my man. That's my man right there. That's my man.
Hey, long time, man. How you been?
Been good. Been good.
Yeah, brother. So you just came in. What we were doing right now is we were talking about China, and we were talking about the investability of it. Like, we have a lot of political anxiety between us and China. So we're just having the conversation of in a macroeconomic lens. Do you think? I want to know your opinion, Burke. Do you think China is an investable company? Is there, as an American investor, would you put some of your portfolio into China?
George, he's a millionaire now due to XRP. He bought it at 2 cents. So I just want to say before he gives his answer, it may be coming from a different tax bracket. All right, go ahead.
That's what's up, Burke.
Nah. I definitely would. Being how large the country is, and we know the influence they have in everywhere else in the world. So if I'm able to, I will. However, obviously being in the military and then dealing with clearances is kind of hard. Investing in certain things, so I'll have to be cautious on that one just because of the military. But if I could, I definitely would.
That's what's up, man. Yeah, so we were talking about this company named Didi, who is like the Uber of China. Even though they beat out Uber in China, they basically kicked out Uber out of China because they weren't making money there because Didi was so strong there. They're gonna IPO soon. They're gonna have an initial public offering on the New York Stock Exchange soon, and we're just having the discussion of if we think this is an investable country. I'm in the camp that it is. One of the things you need to understand, though, if this is for the viewers, if you are going to invest in American companies, just know there are economic catalysts you got to deal with. The economical landscape is not perfect here. So that's kind of the turmoil you can suffer here. In China, it's more of a political thing. So When you are dealing with Chinese companies, that's the risk you have, political risk, whereas American companies are economical risks that you'll have to deal with here. So there's a risk no matter what you do. But I think just because of the sheer amount of people that China has influence over and how many people they have there, how much money is there, how strong their economy is compared to how strong ours is,
Yep.
and how loyal the Chinese consumer is to Chinese brands. There's like the room for growth is exponential. That country there, they even have to slow down their growth. Like their currency was growing so fast that in order for people to still be able to buy stuff from them outside of China, they literally had to slow down the the currency. They had to keep it down and put a cap on it so it wouldn't get too strong versus the dollar. And that's scary, you know, when that's like economists weren't even expecting that until around 2035, 2040, when that would happen. But it's already happening now, and it's only 2021. So you can just foresee where we'll be in 2040. And as an American investor, you need to accept that and, you know, put some of your political woes aside and still invest in it. Being in the military, I don't think it's going to affect you to invest in a Chinese company, as long as you're not taking a big stake in it. You know, like if you bought Alibaba or something like that, it wouldn't affect you. One of the things that I couldn't find anywhere where I've asked like myself is the feasibility of investing in cannabis stocks from our perspective. You know, like that would be wrong for us to invest in a cannabis stock. I know we're not allowed to like completely own a cannabis store or some type of brewery, but you know, I wonder if we can invest in the green space from our perspective. I'm not sure if you have an answer for that or not. I don't know if you guys know.
I actually spoke to a Jag about that. I saw it in writing somewhere, but according to another Jag, he said it's completely legal, specifically with cannabis stocks. So I feel like the jury's out on that. But to your point, I do think regardless of anything, you do wanna keep your eyes on that market.
Yeah, some of the things we talked about before you guys jumped in, we were talking about the 10-year yield, and you know where to invest. Being where we're at on the 10-year yield, is you got to watch it. So a stock like Caterpillar dropped like 15% because the 10-year yield dropped from 1.65 to 1.45, and you want to know where to put your money. Like if you think that it's kind of like buying call options. If you think the stock is going to go up, you're going to buy a call option on it. It's the same thing with the 10-year yield. Like there's certain kind of stocks you want to be in if you think it's going to go up, and there's certain kind of stocks you think you want to be in if you think it's going to go down. If it's going to go down, and you really feel that, I feel it's going to go to 1.25, honestly, and like that'll be this year. There's certain type of stocks that you want to be in there. But Matt, what do you think? Like, do you think you see the yield moving up or down? Where you at with that?
Long story short, I feel like it's gonna go down. It may have certain shocks to the upside, but ultimately, we have no choice but to go down. That and what's your take on the inflation rate going up? Right, the CPI data, monthly data showing that we're at 5%, and yet yields are going down. What's your interpretation of both of those two metrics moving in the opposite direction?
Well, I looked at it honestly more from not just this year. I looked at the past 2 years. I didn't do it on a monthly basis. I looked at it from the last 2 years. And the last 2 years, it was at 5% between both years, which averages 2.5% between 2019 and 2020 until now. So year over year, 2.5%, which is according to the Fed, you know, they're going to let us run hot a little bit. However, this type of inflation is is very different than before. One of the terms that you'll hear when you hear economists talking about inflation, you'll hear if it's transitory or not transitory. So transitory means that it's, you know, it's whether it's here to stay or not here to stay. Is it short term or long term? And whenever it's transitory or not. But I'm in a different camp because there's things that are overpriced right now, but it's not because there's an over amount of people buying. It's because of supply shortages. So it's a different aspect that we expected. There's a lot of trucks right now from different companies, a lot of vehicles, electric vehicles that are already built. The bodies are already built. Everything's already built. And they're just waiting on semiconductors to be received in order to put the semiconductors into those vehicles to be able to sell them. So this inflation we're seeing in housing, in the vehicle space, is not because we're overinflated and there's so many people that are buying stuff, which is usually the case. Like, we're overinflated. Everything's at a high because there's a demand high. Right now, there's a shortage issue. So it's very different than we've witnessed in years past. So I think once we get like the chips start being built, and that's another space you could look at. Taiwan Semiconductors is going to be huge going forward. They're building, which is basically being funded by the government. They're building a $20 billion factory in the United States, basically funded by the government. And that's going to, like, AMD uses them. Apple uses Taiwan Semiconductors. NVIDIA uses Taiwan Semiconductors. So you have the biggest companies in the world for chips are using Taiwan Semiconductors to be the last process in the like, they finish the products and they put the proprietary technologies from these companies into different chips, because obviously a cell phone is going to use a different type of chip than a vehicle is going to use. So as soon as that chip shortage is corrected, then what always happens, no matter what sector it is, things go in cycles. So one of the things you're going to experience is, right now we have a housing issue where it's not that the houses are so overvalued because there's not enough supply. So what happens 2 years from now, you're going to see that home builders overbuilt and there's going to be too much supply. So what's going to happen to prices? Prices will tank. There's going to be too many cars out there with not enough people to buy the cars. Prices will drop. What can cause a crash, what can cause a big issue, is if you couple that with the fact that now consumers are, with all this debt that they took on last year and this year because debt was so cheap, if that debt catches up to companies, it catches up to the individual retail investors, and you couple that with the fact that there's too much supply of everything out there and not enough demand for these things, then we can have some real issues. But that's my thought on it, Matt.
So you're in the transitory camp.
Yeah, I strongly feel that we're going to experience different things. Like right now, we're not, things are not the way that, it's kind of going the same way, but not for the same reasons that we thought it was. So I think we're going to continue to grow hot. That 1.25 is good for growth, is not good for value. But I would be right now being at 1.45. If you see that yield go to 1.65, guess what's going to happen? FANG stocks, Facebook, Amazon, Apple, Netflix, Google are going to drop. Then you're going to have your financials, which are going to outperform the S&P 500. However, it'll be the opposite effect. If you see it drop 1.25, you have your financials that'll drop. You have your industrials that will drop, such as Caterpillar. And then you'll have FANG, which will continue to outperform because, their valuations will start making more and more sense. And valuations kind of are correlated with wherever the yields are at. That's where people try to make, is 15 times earnings worth it with this yield? Is 20 times earnings worth it with this yield? And you got to compare it to the benchmark, which is the S&P 500. However, if you're investing in these meme stocks, then your benchmark is not the S&P 500. Your benchmark is more like the Russell 2000. But that's my perspective there.
Yeah, I'm in the camp of course, I know you say I'm the bearer of bad news, but I'm just looking at the signs. I'm in the 1970s inflation style camp. I think it's more than transitory. I think that's, I always think especially on the mainstream. I always think they come with these narratives to calm the investing community. Just like this whole pandemic thing was supposed to be over 2 months after it started. Um, I do think we're gonna see inflation persist for a couple reasons, right? The M1 money supply went up dramatically. It's still going up. We have new initiatives from the administration, and you see rates going in the opposite direction of inflation, right? So that's another telltale sign. And also, as the economy reopens, there's going to be more spending, right? So then that means there's going to be more money velocity out there. So when you have a larger money supply with the, and I'm speculating on this part, with the increased velocity, that's a natural recipe for inflation. So I do agree it's not that black and white. You have deflationary forces out there, but I think all in all, I expect prices to rise across the board. And I personally I think it's deeper than a supply chain issue. Um, I think people just have more cash now. But we'll see. We'll see.
Yeah, so what he's talking about there, the money velocity, not to insult anybody's intelligence, but all he's referring to there is the M1 money supply. So money velocity is just how fast money is moving, and it's very self-explanatory. And this moves into inflation and GDP growth and things like that. So the rate that velocity is moving from point A to point Z, the last final point when the money goes back and gets burnt eventually, how fast is that all occurring? And it's not occurring as fast as people thought, because even though the economy is reopening, the amount that people have saved is grown exponentially. The amount that people owe has reduced exponentially. And even though you would think that's a bullish thing for the American economy, that there's less debt for retail, for American companies, that we have less debt, that's actually kind of a bearish sign, because the less debt we are in collectively, the slower we grow economically. So just think about that in mind. Not saying that debt is good for you to have, not saying that at all, but debt helps companies grow faster, which leads them to being able to hire more people to work for them, which increases the amount of money that gets put out there and back into the economy. So debt is good for big companies to have. That's how they avoid paying taxes. One of the things that Elon Musk did was that he, instead of selling his stock, he'll take debt on his stock, and he doesn't have to pay taxes on it. He actually gets tax credits because he's using debt to fund different things. He doesn't have to pull money out of his money that he made from, he doesn't even take a salary either. All his money is paid to him in stocks and all these different things that he does. Jeff Bezos got paid last year $1 from Amazon, and they do this because it helps them with taxes. It minimizes their tax burden. And as a retail investor, you got to think like these guys. Like, when you get into these meme stocks and all that, you're creating tax events. And if you would have just held a good investment for a year, you may have ended up making more or keeping more of your initial investment than just by buying and selling and buying and selling and buying and selling. Because every time you do that, you're creating a taxable event. And what ends up hurting people is that they'll do a 500% gain or 1,000% gain in one thing. Let's say they pull it all out, or let's say they keep it in there. But let's say they pull it all out. Now they put it into something else, and let's say that thing drops. So now they go back to where they started at, but they still have that capital gain from the initial time they sold, and that's what ends up hurting people in the long run. And don't even get me started on margin. I know Matt invests all in margin. He's the big margin guy. Just yeah. No, I'm just playing, but like margin is even worse. That's a even bigger monster to deal with, So we got about 6 minutes left on here. Matt, I wanted to ask you what moves. We'll just go around the room and see what moves people have been making this week. What move people made last week, and what moves you plan on making this week, if any, or if you're just standing by and watching. So just that way the viewers know, which way we've been moving.
So I'm gonna always start with the staples, right? Of money itself. Obviously the gold, obviously the silver. We got Basel III around the corner. That's supposed to be a regulatory framework that prevents all this paper, gold and silver, take it off the market. So just in case if there's another Lehman style collapse, people actually have the assets they say they have. And inflation as well. But also, I'm starting to look into other commodities. I'm buying into the world going green. So I'm buying a lot of uranium. I'm buying a lot of copper. Um, what else? I am in
Is this
crypto.
the fit? Is this the physical, or is this like?
Nah, I can't do physical copper, man. That's too much.
Okay.
My breath is smell like pennies. That's that's too much. That's I'll be walking around smelling like a penny. But
All right, so go ahead.
I wanted to ask you as well, Bitcoin predictions, end of year predictions. Um, let me see. I think that's all I'm invested in. I'm looking at NFTs as well. Real estate space NFTs. But yeah, I'm curious to hear your BTC predictions once we finish going around the horn.
All right. Burke, anything special you bought this past week or sold, or anything you plan this week, maybe buying or selling? Not sure if he's there.
His mic's on or off rather.
Oh, your mic's off, Burke, if you're trying to talk. He may stepped away.
Bert said he had to step out.
Oh, okay. Gotcha. No, that was the other guy. Jonathan, I know you recently got into invest. Did you buy it or sell anything last week? And do you plan on buying or selling anything this week?
Yeah, so like I said before, I used to buy and sell. Right now, I'm just buying and leaving it there. Even if it goes down, I'm leaving it there.
Anything specific you bought or sold?
Yeah, hold up. Give me a second. So basically, so I just like in Tesla, I invested in Tesla, Apple, Amazon, things like that, but nothing too crazy, you know? Like 300, 500 here, 800 there, regular.
All right, man. So that's great. As far as the question that Matt asked me, he asked BTC predictions, and my sentiment's still the same. My bearish case is around that $20,000 price range, which was the initial catalyst back in 2017, 18 when the crypto market crashed. That was the big point right there. That $20,000 mark was a big area. So it might serve as an area of support. And that's if it falls down, it can't fall down that far. I know some people have it at 13,000, but my bearish case right now is 20,000 for the end of the year, especially if we going into, I can see it. I expect us to hit the point of the cycle where we hit a bearish area for the cryptocurrency market. So it'll be a bear market. And I could see it around 20,000, 21,000 steady though. And, it'll fluctuate there between, 25, maybe drop to 18, back to 25, but steady around, correlated around that $20,000 range. In the base camp, I'm between 30,000 and 45,000. And in my bullish case is a brick stretch, but I'm still in the 100,000 to 150,000 time frame. The only thing that will change this sentiment is if the flippening happens this year. For those who don't know what the flippening is the term that is given to when Ethereum will eventually surpass Bitcoin and become the number one biggest market cap for a cryptocurrency. If that occurs, then that can be a bearish sign for Bitcoin and a more bullish sign. A lot of that money that's being nested in Bitcoin might transition into cryptocurrency as more people get educated on all the different things that platforms like Polkadot, Cardano, and Ethereum have that Bitcoin will never have. So, well, that's one of the things to look forward to. We have the protocol coming out that's going to make Ethereum deflationary. There's going to be Ethereum burned every single time there's a transaction. That protocol is supposed to be coming out this year. And then we have ETH 2.0, which is in the pipeline, which is going to expand the amount of transactions that Ethereum will be able to make per second. And these can be bullish catalysts for that cryptocurrency. So I can see that being a catalyst to push the flippening to actually happen this year. So if those things occur, then obviously the sentiment's going to change. That'll definitely be very bearish for Bitcoin because people won't see it as the number one cryptocurrency out there. But with all that said, man, we were exactly at an hour. Thank you guys for joining me. Any last thoughts, Matt? All right, we're all good. As always, invest in us and press that like button, invest in yourself, and smash that subscribe button. Until next time.